September.
Okay, good morning everyone, and welcome to this live intraday strategy webinar on SB Trade Desk. We just got the release of retail sales coming out weaker than expected, negative 0.3% on X Auto. That takes us down below the negative 1 or negative 0.1% expected. Downward revision to the previous month, downward revision to the previous month, and downward revision to the previous month. So not good news for the dollar. You're looking at the dollar index here breaking support. Certainly, we've been looking at the Kiwi, which has broken the invalidation level for the short side. That's trying to break through the highs at this point. And we have a lot of stuff to go over today. So as usual, guys, always good to be with you here this morning. Feel free if there are any questions, trade setups you're looking at. We'll jump right in here to yesterday's report. A quick note, we still have more U.S. data on tap later in the day with business inventories, but more importantly, later in the week, we get those CPI numbers, and that's what's going to be the real critical piece here as far as what the Fed is looking at with regards to moving forward with interest rate hikes. So we'll preview that as well. All right, Merdad, good morning. Eileen, Mario, great to see you guys as always. Draghi's not nothing over Wheeler, right? Yeah, so obviously the Kiwi's been doing pretty well. It's had a really nice move here. So we'll go over that in a moment. First things first, I just want to focus on the dollar index right now. Looking at broader relative performance on the greenback, you can see that it's weaker against all its major counterparts. The index came right into the 100-day moving average yesterday in U.S. trade or post-U.S. trade. That held as resistance. We saw a breakdown back below this median line that we've been working with off the highs. And here we are breaking the weekly opening range low. Keep in mind, you still have that median line parallel, which comes in just lower above 11,900 handle. But certainly for the dollar index, not looking too constructive here. Here's what the daily looks like real quick. So right now, as it stands, if we are able to push and close below 11,920 or so, it would be a nice outside reversal candle off of that 100-day moving average, which capped the advance and overnight trade. Next level down that you'll be looking for would be right here. This is the February high, also the swing low from March, the close opening range high for May, and has been a very nice pivot in price. Here's the June swing lows also capping or halting right there. So that takes you into 11,886 or so. The critical support confluence is just lower. You got the 764 retracement, basic trendline support, and the median line off the highs, all right down there at 11,860. All right, so on its face value, now that we've broken the opening range low for the week, if we're able to close down here, that would give us a near-term bearish bias and confirmation for our near-term outlook on the dollar. On the intraday chart, as we just looked like, it's still a pretty clean picture as well. Okay, a quick pop above that median line did see this thing cap by the 200-day moving average. We're right back below it. Didn't get a close or anything above that, so we're still continuing to favor the downside here. Look for some support along that lower median line parallel for the index. Also note this is the first venture into oversold territory for the week, so we'll want to see if this is able to push deeper here. You'd be looking to sell a rally back towards the median line here. If we do make a nice opening range low into that region, watch to play the recovery for a move back to the downside here in the dollar index. So it would jive really well with what we're looking on the Kiwi, on the dollar CAD. Certainly we'll take a look at that. We've been all over dollar CAD. Yesterday was a great day. We nabbed a whole lot of pips on the dollar CAD. I got stopped out of break even for the Aussie Yen and overnight trade. Played it a little bit too close, put the stop at break even before going to bed. It eventually did rally into the targets that you saw in yesterday's report. So again, sometimes being a little too prudent can limit your opportunities, but what's past is past. All right, let's jump right in. Any questions on the dollar index before we move on? Hamid, Euro Oz, love it. We'll definitely take a look at that as well. All right, so first things first, let's jump into yesterday's piece on the Kiwi. And certainly this is a trade that Jamie's been all over too. You know, we've both been really interested in what's been going on with the Kiwi here. Even more so, I think, than the Aussie, and that's why I didn't include Aussie on yesterday's piece. I still have been playing the Aussie moves by way of Aussie Yen. It's just been working out a little bit better. It's got a little bit larger of an ATR. So as far as the comfort level, it's a little bit more adequate for me. But first things first, here's the Kiwi dollar. So we noted in yesterday's piece, look, this thing is coming into a near-term support. Here's what we look like on the daily. Former upper median line parallel for the formation off the yearly lows, or off the September lows rather, offering some support. Okay, that swing low that you saw there was also 66.19. That was also the opening range low that you saw back here in July. Nice pivot in price, confluence support. On the near term, there was even a confluence support of just the embedded advance here. And we were looking to play a little bit of a rebound. Now, the invalidation level for the short side was this level here, 66.97. Remember, we were holding this ascending formation for nearly 4 weeks. The break to the downside, you expect to see us come back, test that support, former support is resistance, then move lower. If that breaks, invalidates the short side of the trade. And we already noted that daily support was already at that level. Basic 236 off the low, even highlighted more so with 66.19. So the rebound did hold pace. Here's what it looked like yesterday on the 30-minute. 66.97 was the upslope target. As soon as that broke, confirmed the reversal for the upside. Targets at 67.37. Next target on the upside right now is 67.70. We're approaching that pretty quickly. So here's what it looks like on the intraday. All right. Also, that we noted in the report, you had some divergence into a trigger break. I've told you guys this many times, 9 times out of 10, I will take that position. The trigger break came a couple hours into the Sydney trade session, or into the Tokyo trade session rather. And again, topside target 66.97, 67.37, and 67.69 is the next target. I do want to bring to your attention a couple of different things. The upper median line parallel comes in just beyond that at 67.80. And more importantly, 67.80 also represents the highs that we made for that swing in July. So you do have a near-term confluence there. Again, could provide some kickback. Wouldn't necessarily be interested in getting too aggressive on the shorts, while although if we do get some compelling short triggers off there, you're only looking for 24 pips, so it might be a nice short play. I'd rather be buying dips here in Kiwi Dollar though. Remember, a couple of days ago on the Monday setup, we noted that for the Kiwi, it's had such a massive 9-day rally. If we go back in price, or if we go back and look, last couple of times we've seen that, they've been very quick interruptions in the uptrend before continuation. So that's exactly what we got. We essentially got one down day, and here we are going through the highs. Keep in mind also that if we do break the high today, it would be, again, a reversal, not an outside day. Not quite an outside day like you're getting in the dollar index, but it'd be a nice reversal candle through the highs. So looks good. Momentum, really constructive, guys. Remember, this was the first 60 break we got this year. It's the first 60 break from oversold conditions that we've seen. Oh, goodness. Since back here, oversold into above 60. Okay, that was the onset of a much more substantiated rally off the yearly low. Looks awfully similar to what we're doing now. Okay, so on that, also keep note that on the pullback, we found support at 60, which is also a very constructive development. I'd be very cautious here, guys, as far as trying to take this any further beyond a scalp in this general directional bias. Meaning, if we're playing the long side from a scalping basis, make sure that we're snapping those at 25 pips, 30 pips max per scalp. You're on the upstretch. You're on, pretty substantiated rally. You could get some more pullback here. If we do make it into 68 specifically, it might be an area where you see a little bit more pullback, but make sure we pick our entries a little bit more carefully now that we've broken the highs. And again, we're trading at the weekly high at this point. From the near-term standpoint, here's what it looks like on the 5-minute. Okay, so off the Sydney lows, you've actually been having a very constructive momentum signature. Break above 60, hold at 40, break above 70, hold at 50, and here we go. So just keep that in mind there. The overnight trigger that was really the best one to watch was this one. Again, divergence into a trigger break. Price action making a lower low, the oscillator making a higher low, 3-point trigger break. So beautiful entry on that one. Any questions on the Kiwi before we move off? As far as the Kiwi is concerned, event risk ahead. Tomorrow's CPI print for the United States, and then tomorrow night we also get New Zealand CPI as well. And obviously the disinflationary conditions around the globe has been the focus for all these central banks. So inflation data is becoming more and more a forefront type of print, even more than the unemployment picture is. So be on the lookout for that print tomorrow. All right. The next one on tap from last night was Aussie Yen. And the Aussie Yen was coming into a major area of support. Here's what the daily chart looked like. That area was defined by a major Fibonacci confluence, former median line support turned resistance, again being tested as support, and momentum was testing the 50 level in RSI. So you had a lot of things to suggest, hey, look, at this point, you've slammed into a low. You've had a really nice sharp pullback from a major ascent. Even on the near-term charts, a basic Fibonacci level was right there. So at this point, you'd be looking for a little bit of a rebound. At the end of the day, the picture still looks pretty bearish on this from my point of view. Momentum turned ahead of 60. 87.30 would suggest that you have another high to make before you turn over. But the picture is you're still trading within the confines of this broader ascending formation, or descending, excuse me, pitchfork formation. Here's what the intraday charts look like last night in the scale charts. So again, you can see a nice pivot in price along that region. And the invalidation level for the short side was 86.87. And that was the initial target. If you read the piece with it, we're looking for long triggers above this region. Top side initial targets would have been 86.87. So the play actually did work out. Again, I got stopped out at break even. I got my stop a little bit too tight on this one, but here's what it looks like so far on the daily. So a nice rebound right off that region, right off it, literally. Here's what the 30-minute looks like. We're testing that resistance still. Larger ATR a little bit here than some of the dollar crosses, 31 pips. So you're looking for 32, 30 pips per scalp. And the entry was there. It's just a little frustrating for me when I play it too close like that. But in general, we were looking for just a tag of this confluence region, okay? And on the pullback, here's how it looked. On the pullback here, you had some divergence. I don't know if I had a trigger break on this. I think I just used the 50 move here as a trigger. And about an hour left, put stops at break even. We came right back into entry, stopped me out, and then here we are at the target. So again, watch this region of resistance near term. The risk still remains weighted to the downside below this median line. So if we take a zoom back, this is the one that we added last night, guys, just for clarity, for those of you who've been following along. By the way, I see some new faces in here. Guys, always remember, if any of the charts that you see here you need for future reference, please feel free to click on the top right-hand corner camera, and the GoToWebinar software will go ahead and take a snapshot of that picture for you so you can refer to it later. But premise being, the downside play was a break of that formation, which mirrored a really nice slope off the lows. So that's still the risk and the resistance region for Aussie Yen. And despite the fact that we're seeing a little bit more of an Aussie topside pop here, the yen hasn't really been doing much. So just keep that in mind there for the Aussie Yen. So where do we go from here? If you're holding the long from last night, I still would be looking to trim some here and bring stops to break even at this point. If we get the rally into the US Open and it tags that resistance, that would be my last area of target. Also, on a move like this, guys, it's really prudent just to tack on a quick retracement and see if any levels come up of interest where we've seen former pivots, reversals, and the like. if we do that properly, these are the levels I'd be highlighting. So 87 is the basic 38.2 that actually capped the advance in European trade this morning. So I'll leave that there. But more importantly, your invalidation levels for the broader short side is going to be right there at that 50% as it coincides with the lower median line parallel. So if we break that high in U.S. trade, keep those longs in play, buying pullbacks, this would be the region of which we'd start to look back for short triggers on Aussie Yen. If we break back above this, the invalidation level for the short side's done. Okay? Still looks pretty good. Remember, we're just playing the rebound here. Just playing the rebound here. Broader structure is still within the confines of this descending formation. And momentum, reversal ahead of 60 is not too constructive. Okay, so again here, even more so than what we talked about yesterday, is the fact that the upside rally, I think this was 9 consecutive days to the upside. The last couple of times we saw that in Aussie Yen, the pullback was even shorter in duration. It was only a couple days that we saw a quick interruption and then a continuation. So we'll need to see that break back above 87.50 to validate the push higher. And 87.50, by the way, is just simply the swing highs that you made there in September. All right, so that's Aussie Yen. Level's pretty clean. Still expecting maybe some more upside into U.S. trade, but inevitably we're looking to sell that towards that 87.50, 87.33 region. All right, we are running through this. Aussie Yen, by the way, was another one that we played beautifully yesterday. We nabbed a nice 60 pips on the downside for that from a short from 87.90. Again, that was based on the China data spike, so that position closed out pretty well. At this point, like I said, we're still at risk for possible another rebound higher. A little support trigger there. Okay, last but not least from yesterday's piece is Euro Oz. For Hamid, this is for you, my man. What can I say? This was a piece I also highlighted on Daily FX. The rally here just basically surged right through all the targets. So if we look at the Euro Aussie, well, first of all, just a quick reference of the weekly chart for Euro Oz. This is such a beautiful confluence region that we came off of as far as the resistance zone. A basic 50% retracement from the decline off the 2008 highs. 618 extension confluence from the advance off the lows. Gave you a basic region of 6280 into 6360 of resistance. A median line off the lows, also from 2013, came right into that region and really capped the advance to the push to the downside. All right, the yearly open comes in at 49.88. I just want to put that in reference for a moment here. So remember 49.88. We come to the daily charts now. All right, 49.88 is that major trendline support, or major support rather, that we just talked about in the weekly chart. 49.50 turns out being the measured objective move for the double top formation. So remember, a double top formation doesn't mean anything until you break the lows. Well, we broke the lows last week with some conviction and closed below it. Shifts the bias to the downside. A measured move of that rally gives you an objective target at 49.51. That also happens to be a basic 50% retracement of the 2015 range. This retracement doesn't take into account the swing high that we made there on that radical day on the 24th of August. I'm taking the retracement into the close of that session. But either way, you can see a nice confluence region there, there at 49.50. So long story short, guys, the turnover and the break below the median line parallel keeps the risk to the downside for the Euro Oz while below this region. In fact, if we get a spike into 59.20, this is the ideal entry, depending on when it happens in time. This is just simply the monthly open. On a near-term prospect, it's also retracement, which I'll show you in a moment. And then you have the upper median line parallel. Here's what Euro Aussie looks like in the near term. Also look at this momentum signature, trigger pending. Here's the 30-minute. So post yesterday's report, there was really only one play, and that was to try to play the rebound off of that region back towards 56.80. You did get that first target. Risk remains to the downside while within this formation, as we noted. A topside break beyond here, basically looking for that 59.20 level to be the final last leg higher. That being said, coming into these highs, you had some divergence. Price action making a higher high on a closed basis. Remember, bring it into a line chart. Make it easier on yourself. Higher high, lower high. Trigger break, shifts the focus to the downside against the highs, looking for about 60 pips per scalp. So another beautiful play panned out last night here on Euro Aus. Again, keep in mind that support barrier coming into 56.81 is still the level to watch. None of the targets have changed from yesterday, so that's been taken out. If we break below that, you're looking for a test of the initial weekly opening range high, and that comes in dead on with that median line, 55.60. So let me just give you a zoom out here so you can get a picture of what's going on. Okay, so this is the operative slope that you're looking at in the daily chart. There's that support. Here's the embedded slope, which caught the highs. All right, so a little clearer of a picture there for where we are in Euro Aus. Really need to be testing that support and break to the downside to get this thing going again. Watch 56.80 as support. See what the 5-minute looks like here on Euro Aus. This is a 1 minute. So even even a pitchfork right off the high here in intraday price action. This is a 1 minute chart, guys, for Euro Aus. Just from the highs from Asia. You can see that the median line parallel here, which has seen some really nice pivots so far just over the last 24 hours, comes in at 56.80, which is the level that we highlighted here on the scalp. So watch that level of support. The focus region into the U.S. trade session is 56.80 to 57.60. Remember, that's nothing for Euro Aus. 60 pips is a quarter daily ATR, and that's typically what we'll be looking to target on our scalp basis. Any questions on Euro Aus? These are the three that I've really been focused on most. The other one that I was trading yesterday, as I was saying, really actively all over the place, was dollar CAD. And we'll definitely take a look at that. We had 4 scalps just in dollar CAD yesterday. And we were 4 for 4. It worked out pretty well. That rebound you want to be careful with. So if there's no other questions on Euro Aus, here's what dollar CAD looks like. Look, I know that the swing trades are in a long position here. Essentially looking for 130.30. I love the level. I think it's a huge region, and it's also the median line parallel off the highs. From a scalping near-term prospect, we've been both on the long and the short side of this, mostly playing the longs from earlier in the week. That dip yesterday into the open of U.S. trade, man, that was an easy gift for a long side move. So right into the U.S. Open, you saw a huge decline right into the 618 retracement. The opening range high for Asia on Sunday almost caught the low to the pip. Okay, momentum held 40. That was like a gift type of punt trade. That one got closed out at target 130.30 again. The pullback didn't hold this possible formation I was looking at. So this is no longer essentially in play. Christopher Hudson says, good morning, Mike. Where can I see those scalp setups on the site? So Chris, right under the intraday charts, man. All of these reports are right under intraday charts. The radar charts is sort of what's on radar. This won't necessarily be updated every single day unless there's a new setup I'm looking at. But these are broader pictures. They're all operable, so you can feel free to scalp any levels in these as well. But the reports, the latest ones will be right here. Or if you want to just go through all of them, you can click on latest setups, and that'll have all of them listed right for you. So here's yesterday's piece with all the scalp targets. I'll throw the link for you there, just in case, Chris. Hope that helps. So what I wanted to say is, at this point, this is not going to be an operable slope we can work with anymore, at least in, for me. So zoom this out to give you some color here on where we are. Here's what the broader trade looks like. The whole premise is the rebound off the lower median line parallel. You had some really nice divergence going into that low. You made a break of the weekly opening range high. The upslope saw us come right into that pivot that we made last week, literally, and pull back off. Still looks constructive to me. Momentum signature is still holding above 40. And I still think you have some upside to go before this thing turns over. Topside target, main resistance, bearish invalidation level, you name it, all at 131.38, 131.40. Where were your 4 entries on dollar CAD? What made you continue to jump in? So, Eileen, I don't have the entries in front of me because MarketScope doesn't show the entries from yesterday. The entries I have jotted down here are just the most recent ones. Was long at 130.10. We got out of that one first at 130.19 and then 130.30. And then there was a short somewhere there that we just snapped, I don't know, like 12, 13 pips on. Last night, I actually tried to play the long again. I got stopped out a couple of times. Let me show you that one. Really insignificant. One was like a 9 pip stop. The other one was like a 10. But right here. So these were just trial for entries as we continue to press the opening range low for Asia and couldn't make it lower. Momentum was holding 40 after a 60 break. A little bit premature on the entries. Here's what the 1 minute looked like. And there was a couple of just kind of blips on the radar, Eileen, that kind of tricked me into the long entries. Didn't work out. But again, real tight stops on these. You're playing just a break of the initial Tokyo opening range. So the stops on them were right below the Tokyo open. And you saw a couple of trial runs here through 60 that failed. All the previous day's scalps obviously get reset on MarketScope, but there was mostly on the long side. There was one short scalp I played. It wasn't for the full quarter of daily TR, but worked out pretty well. At this point, well, at least on the 1 minute chart, you had a really nice momentum divergence that we just missed here. Wow, that was a nice move. How do you use RSI as an indicator for entry? So Jency, great to see you in the room here. I think I haven't seen you here before. We look for momentum signatures to give us little triggers. So just as you look for a break of trendline resistance support in price, we also do the same thing in momentum. So we look for the trigger to actually put us in the trade on a 5 minute chart. Sometimes I'll go as granular as a 1 minute chart. On the 30, though, I'll always have them drawn as a point of reference. So once I'm in the trade, once I'm looking to ascertain directional bias, something like this would confirm for me an upside break. So Jency, feel free to keep asking questions. I'm sure a lot of people in the room have similar questions, but we'll just look at more examples of those RSI. We do them every morning here in the webinar. So we'll look at what RSI triggers are essentially pending into the US Open. I like this move here in dollar CAD. I think we, during our little discussion here, might have just missed entry, but we'll look for the US Open to give us a pullback here. Again, I'm pretty constructive above just the weekly opening range high. Objectively speaking, we tested that as support. Nice pivot in price, just below the 618. On this stretch here, you'd still look for the same target that we went into yesterday, 130.30. Nothing's changed. Nothing's changed. Jency says, okay, excellent, thanks. Eileen says, thanks, you're more than welcome. Hamid says, unfortunately, I got to go now, sir. Would appreciate it if you take a look at Aussie dollar. Golly, it's running now. Need to wait for the pullback. Yeah. Yep. It'd be great if GoToWebinar screen could handle all of these screens, and that way we can I won't even talk. We'll just scalp live because we tend to miss a lot of them during these webinars. But the market will always provide more opportunities. Again, the sweet spots for my trading over the last 2, 3, 4 weeks now has been the Asia Open. So like 6 o'clock here in New York into 9 o'clock has been most of where the beautiful entries are coming in. And then into the close of Europe. So US close into Europe, or European close into US around 11 o'clock, 12 o'clock here in the United States. It's a weird time, lunchtime. A lot of times you see those moves faded, and that's another opportunity to get in on some scalps. So keep those time slots open. Eileen says, ha, that's all you need, even more screens. All right, don't go chasing here. We're already 40 pips off the low. So if you're in the swing trades, looking good, nothing to worry about. If you're looking for re-entry on a scalp, again, I can't justify really jumping in alongside here, but looks good. Looks good. We were premature trying to jump into that one yesterday. Dollar CAD has offered some nice positions this week, and we'll let it continue to do that. So that's dollar CAD, Aussie dollar, Aussie yen. Let's go over Aussie dollar here for Hamid since he's got to leave. Here's what Aussie dollar looks like on the daily. All right. Real nice rebound off that level of support. If you remember, Aussie dollar was on the previous intraday, update from, I guess that's Monday. And here's what we looked at with the daily chart. The shift focused to the downside, and we highlighted that major key support right down here at 71.80 into the 72 handle. It's exactly where we bottomed. The top side of that range, today's low, was 71.97. So, a small rebound off that, looking to check resistance again here. The major breakout back to confirm the upside would have to be above that slope line off the low. Initially, early in the week, we talked about shifting the bias to the downside based on the premise that this resistance region was a pretty nice confluence. So you had the 38.2 off the high, the 100-day moving average, and you can see that we failed to push through that, closed just below it, and the break below the median line shifted the bias to the downside, targeting 72.78 and that 71.80 region. So we've achieved all that. We've come into that region. We're seeing a little rebound. Where do we go from here? Here's what Kiwi looks like, or Aussie rather, on the 30-minute. So let me zoom this out. There's, again, we went over this yesterday, but I just want to clarify it again because there's a lot of median lines going on. I don't want to make sure everyone's on the same page. So here's the operative one that we're working off the slope on the daily chart. Okay, the broader trade and the rebound remains constructive while within this huge formation. Remember, for the Aussie, there's a lot going on. Okay, you had some a very nice recovery off the lows there. You took us right back within the confines of a median line formation that has been in play since 2013. This is the first break into overbought territory since March. And a broader change in behavior here looks for us to shift our bias to the upside. So on the back of, again, a 9-day rally or an 8-day rally, whatever this was, we went over that, you expect to see some more pullback. The rebound here, before we start to jump on continuation, sorry guys, we need to clear Oh, there we go. Before we are able to jump on continuation, we need to clear back above that median line parallel again. Okay, so the embedded median line parallel formation, this has been in play for nearly 3 weeks. That broke. Downside targets into essentially last week's swing high, 72.33. Sliding parallel for this formation. Let me change the color on this one now, just real quick. So we had two. This was the one off the low, and this was the embedded one that we were working with until this week's break. A sliding parallel for that same slope, well, pretty much caught the lows here, which still keeps a floor under the pullback in that rally. Long story short, guys, if this is seeming a little back and forth, long story short, I'd be expecting another push into this region at this point. I'm going to go ahead and lower the bearish invalidation level to this confluence region for both of those median lines. Takes you basically into 73.45, 73.50. We might see a bounce that high. That would be the invalidation level for the short side and would shift the focus back higher. All right, little bit of a different picture here than it is in Kiwi, for sure. Kiwi is already reversed and broken through the weekly opening range high. Aussie hasn't. So that divergence is something you want to pay attention to. And it also makes a very interesting picture for the Aussie Kiwi. Here's what that daily chart looks like. The region that we talked about for so long was 109.35 into 109.10. We highlighted that for months and months and months and months. The pivot or the downside break is what would confirm our downside bias. The start of the month was messy, and this is why we haven't looked at this pair since we started October trade, because closed above or closed below, next day we closed above, following day we closed below, 2 days later we closed above. So we were just pivoting there for the longest time. This is the definitive break that we needed. So you're looking for support and a major key confluence at 107.23, 107.11. Also, if you guys recall, those major slope lines dating back to the 2014 opening range low, right back in play right there. So the pictures of the puzzle are working really, really well as far as the currencies are concerned. They're all fitting together pretty nicely here. So the Aussie Kiwi divergence, really well played here in Aussie Ki. Look for support lower down. We are coming to the 200-day moving average at 107.55, so watch today's close. We're trading below it right now, so I'd still be looking for that stretch. But the long story short, you'll want to see us close below that. Any question on Aussie Ki, Aussie, or Kiwi? Haven't updated the chart for the Aussie Ki Scalp so far, but either way you look at it, 107.26 continues to be highlighted, 107.25 as a major area of support near term. Aussie looking higher. Target right now is going to be 73. Above that, 73.40. I started to be looking for short exposure again up here. And Kiwi, just a quick review. Obviously broken the opening range high. You remain constructive while above this slope line. Your inevitable target, you're looking for a run into 67.70. We just got that run, guys. So use some caution here on the long side. But next top side, 68.11. And as I said, that's going to be a nice inflection point for the Kiwi. Christopher says, overall, you feel Aussie bounce will fail given your position on dollar CAD, right? He says, okay, you just confirmed that. Thanks. Yeah, you're more than welcome, Chris. I hope that offers some clarity on that. Craig wants to look at Euro Key. Sure, Craig, let's take a quick look. Haven't necessarily been following it, but we can definitely go off the cuff here. Okay, so let's just take a quick retracement. I don't like using this swing high, so I'm not going to stress it. Work with this swing high. Puts the 236 in the way here, but all right, let's just leave that for argument's sake. Bear with me, guys. Just want to see if we've completed any targets to the downside there. Well, I'll tell you what, you're coming into an area of support here. It looks like so far is today's high. I didn't think today's highs maxed yesterday's. The high from yesterday was 71.96. The high today is 71.89. So no, it's not an outside reversal day, but it is a reversal candle. Monthly open. Comes right about there. Okay. So here's what I'll say on Euro Kiwi. If we take a quick look at the euro dollar, which has been falling out of focus for us for a while because of this chop fest we have for the last couple of weeks. But obviously here we're getting a near-term breakout. I'd be very cautious just because momentum still hasn't broken 60 for the last 2 months. So it's something I definitely want to see after a 50 bounce here to confirm the move. But it looks beautiful. So at the end of the day, I'm constructive on the euro and constructive on the Kiwi, Craig. So that's why for Euro Kiwi, I still think you might get some more chop back and forth, man. On the intraday chart, I think is where Euro Kiwi is a little bit clear, and that just offers a little bit more perspective because it's holding within the confines of this nice formation off the highs. And we're testing median line resistance yesterday. That held, and right now you're just testing the weekly opening range low. So on an objective standpoint, there's no immediate bias for this as far as I'm concerned. The general downslope off the highs is in play. I still think has a little bit lower to go, but on its face value, all you've done is basically set a Monday, Tuesday high and need to wait for a break of that range. Specifically where we turned here at the upper median line parallel, remains an area of interest. So you're in this formation until you're not. You're testing the weekly low from here. If that gives out, 67.70 is where I'd be looking for initial support. That hits the median line, basically into the close of U.S. trade today. Craig, does that help? Honestly, I think this thing is just going to chop a little bit more back and forth before you finally get an inevitable break of this range, but those levels I keep in mind. Those levels I keep in mind. And the opening range high, interestingly enough, is basically the same as last week's opening range low. So remember, in all my charts, guys, on the intraday, you'll see a vertical line separating each weekly open. So yesterday's Monday, Tuesday stretch, there was the low, the break shifted the price to the downside. Here's this week's Monday, Tuesday stretch. Wait for a break of this range to give us a little bit more of a directional bias. Interesting pair, but the dynamics is both push and pull on this one. So I'd wait for a little bit more of a conviction break of that range. Craig says, yes, thanks much. More than welcome, sir. Medad says, can you or could you please take a look at sterling Kiwi? Sure. So sterling Kiwi, I suppose would be a very similar setup. Here's what the daily chart looks like for sterling Ki. Yeah, pretty much right on point. The only problem I have here, look, it's bearish, okay? The whole trade, turned over pretty pretty severely over the last couple of months. I think there's a lot more to go on the downside here, just based on a couple of different things. Obviously, on the stretch on the upside, you got some divergence dating back to June. Higher high in June, higher high in July, higher high in August, higher high in September. Series of lower highs on every single one of those peaks. Last month, couldn't even get above 60 once on that last push higher. Couldn't even get above 60. So the breakdown here going sub 40 in momentum is a change in behavior. It's the first break we've gotten sub 40 from overbought conditions since here. A little bit of a different example because, well, let me say this again. We're testing 40's resistance, so it's the first time that we've tested 40's resistance and held for a while, and that's what we're going to do today if we close lower on the day. But long story short, the broader trade looks like it's turned over. At this point, I still think you can get some more snapback here before it moves lower, just on the basis of the severity rather of that drop off. You're basically holding the July lows at this point, which is the exact low that we made in overnight trade, and I'd stay bearish below that upper median line parallel. Sell below the weekly opening range high. I'm getting tongue twisted here, which is basically the 2350 level. Here's what sterling key looks like on the 30-minute. So this move here, interestingly enough, completes a 1618 extension right off the highs. And another interesting tidbit, I was actually checking this out yesterday, a pitchfork off of that radical high from the 24th of August. The same exact slope mirrored for just a basic channel has continued to hold this for the 4th consecutive week. So look, it's pointless to try to fight this, guys. On a trade like this, you want to sell more towards resistance, buy towards support. Bottom line, the broader directional bias remains weighted to the downside while within this real tight near-term channel. But just like Euro Kiwi, Merdad, just like Euro Kiwi, it's a very basic weekly opening range. Okay, the weekly opening range on this pair and on most of the Kiwi pairs actually has been spot on. You see a Monday, Tuesday stretch. Wait for that Monday, Tuesday stretch to break. That's your directional bias. It's been the same play for the last 3 weeks in all the Kiwi pairs essentially. Same thing here. I would just wait for clarity. Either a break below 20 or 227.20, excuse me. Break below this, we'd look to sell rallies into the median line, or a breach above this region, you'd look to play the recovery higher. In that such a case, you'd be looking to work with this basic retracement. All right. Keep in mind on both the trades we just talked about, Euro Key and Sterling Key, there is quite a large ATR. Okay, you're looking at about 80 pips is a quarter of the daily ATR on Sterling Key. So if you're newer to the strategy, it might not be the first pair you want to delve into. If you've been with me for a while, this is the one that you'll be able to squeeze the most juice out of. I would just wait for a clearing of the weekly opening range. So, Merdad, I hope that helps on Sterling Key. Interesting setup. I've been watching this one more so than Euro Key, just because the Sterling turnaround has been so marked, right? It says, thanks, thank you, you're more than welcome. Oh, we have two different Merdads in here. Sorry. We have a Mahdad and a Mirdad. Well, you're welcome to both of you. I appreciate your comments. Okay, so Jas wants to look at, he says, hi, for the Sterling Oz Daily. Let me bring that up real quick. For the Sterling Oz Daily, based on yesterday's and current bullish candles, do you think there will be a strong reversal to the upside to 217, or the current downtrend will continue? I'll tell you what, I like where we reversed off. And, based on the biases that we have for the Aussie, I don't really want to get too comfortable on a short position there just yet. You know what I mean? We talked about the Aussie dollar. That's sort of, right now, as it stands right now, it's a drifter, which is why I'm not in any positions there. But you could see another rally higher, then a move into the lows, but remain broadly, trying to fit this structure to the upside. The near-term picture for the Aussie, still within the upside slope, right? So I don't want to get too crazy about taking an Aussie short, which is what a long sterling Aus would be. And 217 is a little bit higher than I'd be looking. So let me put things for you this, Jas. I don't really trade like that. I don't really look to take the broader positions. By the way, no one forget, we have Jamie on board for the midweek strategy webinar today at 1 p.m. So stay tuned rather for that. He's going to be the guy you're going to want to ask a little bit more about those broader longer term trades. For me, the bearish invalidation level for the breakdown from last month is 215.27. It's really like almost a 90 pip range in this 214.20 into 215.27. But this thing's got a massive ATR, 238 pips a quarter of the daily ATR. So look, the pullback of the yearly range made a basic 38.2 retracement. That's the lows from August. That's the opening range high from July. Seen a little bit of a support bounce here. I don't know if it's necessarily going to stretch that high. A 618 retracement, or a 618 extension rather, comes in that region as well. And now that we've made that low, bear with me one moment. I bet you the 50 comes in right there. 215.80 is even the 50%. So I honestly wouldn't be looking to target anything beyond that on an upside play here. So let me just clean this up for you. So if you take a retracement just from the late high in September, the 50 and the 618 exactly straddle the region we just talked about. So long story short, to answer your question, Jas, that's what I'd be looking at first. Anything beyond that, if we break 215, honestly, 217 I think will be a cinch. That's just a test of the basic, monthly opening range high, which would be very much on the cards if we break through this. Let's look at this near term. I think we'll get a better picture of what's going on here. So here's what I've been looking at sort of for the near term decline. There is a nice structure here just off the highs from September. So off the two highs that we made in September, taking us to the downside. We've made it back above the median line, made it back above the sliding parallel, which caught the lows, last week before the obvious break. Long story short, the confluence region I was looking at yesterday was right at 213.70. Nice pivot in price. September swing low there, or early October swing low. The swing high that we made into the close of last week. It gives you a region right here. And what I wanted to look at is this advance. Is there any structure to the advance itself? Come on. Well, that's interesting. Resistance, pivot right off it, but at this point it's not going to offer any guidance. And neither will this. All right, it's not the most compelling pitchfork, but you can see a couple of different pivots. Support, resistance, messy, but resistance, 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 and it caught that last one. Brings near-term resistance right into this region here at 212.50, excuse me. 212.55, 212.75. And pushes this confluence region right about there. So some regions of resistance that you'd want to keep an eye out for over the next day or so. 212.75, 212.50 would be first. That'd be immediate, like into today. Keep in mind we're putting some divergence into this high, so I'd use some caution. Sterling is pretty tired. British pound saw a nice rally today on some employment data that came out much better than expected. I shouldn't say much better than expected, but the concern was that you were going to get a weaker print. Okay, so we got the ILO claimant count 2.3% as expected, but we were expecting to see a hold at the ILO 3-month unemployment rate of 5.5. That fell to 5.4. So a nice hold there. CPI figures were a little bit weaker than expected early in the week, so I don't think this is going to have a huge impact. Remember, 54.50, 54.47 is a region of which we've talked about a possible short for a while now. If we get there, guys, I think it might be a nice entry. So if we can extend just a sliding parallel mirroring that slope, gives us room for a rally right into that region while staying broadly within the confines of this formation. All right, because it seems like we're working with the right slope here. It's been guiding price action pretty decently. So watch for that confluence region. If we do get up there, stop somewhere around the 100-day moving average, 54.80 would sort of be the game plan. But we'll have to see. If it breaks, if Kiwi or Sterling breaks this, sayonara, it's probably going to see a pretty substantiated rally to the upside. So it paints a very interesting picture for Sterling Oz with what the Aussie dollar is doing. So watch that near-term resistance, stay constructive while above this region. Does that make sense? Does that help, Jess? Nice pair. Nice pair. Interesting, because last time I looked at this, I was looking at this region here to see if we are going to make the break or not, but nice breakout. Near term, above a very nice pivot. Broadly speaking, you'd be looking for 213.30, 213.70 as a little bit more of a critical resistance near term. He says, yes, thanks. More than welcome. More than welcome. All right. Gency Gold. Yeah. Wow. Wow. Haters gonna hate, but we've been talking about the gold rally for a while. I'll bring your attention to the weekly charts we've been following here on SB for months now. Here's what gold looks like weekly. You know, I haven't had to touch this chart in a couple of weeks. So look a little bit higher. You have the confluence region here, the 52-week moving average, which has been a real pinpoint nice resistance here earlier this year, and the median line off the lows. Okay, that comes in at 1180. I would look just lower even, 1188, where the median line is. And the momentum trigger is pretty much confirmed that we got. Remember the divergence into the lows, trigger break to the upside. This is a weekly chart. This was the huge critical pivot we talked about for so long. We started off the week right there, so we didn't really have a convictional bias, but here's the breakout of the weekly opening range. Here's what gold looks like on the daily. 200-day moving average. Also 1176. There's that median line that we talked about on the daily, or on the weekly rather. All right. Real nice. Highest read in momentum, watch today's close, that we've seen so far since January. Obviously, that took us into the yearly high. Even more granular, here's what the gold 30-minute looks like. We're all over it. Okay, so here was a scalp setup that we put on SB last week. We've made it through the high, so the 1169 target's gone. Let's get rid of that. And let's clean this up and sharpen up these levels a little bit. Okay, so based on the near-term chart, you want to stay constructive above 1160 at this point, 1161. This region here is going to be your near-term bullish invalidation level. Essentially, if we break this resistance, there's nothing on the intraday chart, but you guys know, keep in mind, 1176 into 1180, there's a lot loaded up there. The 52-week moving average, the 200-day moving average, and the median line. All three of those are between 1176 and 1180. If that breaks, and again, I'm just going to keep the just going to mark this here right around the median of that sort of range we're looking for. You're essentially looking for 1190, and that's a 50% retracement from the decline off of the highs that we made essentially for the year. It's actually January. Any questions on gold? So I hope that helps on the outlook there, Gen C. We've been following this one. Honestly, I'm expecting some resistance sometime soon is what I'm trying to bring to light here. The intraday chart is not really as clear because we've cleared all the levels that we had highlighted, so I'm not really going to stress the intraday trade. I'd be looking for some resistance near term. You'd look to stay constructive, like I said, above that 1161 level. All right, guys, we are over on time. Got to wrap it up there. Again, Jamie will be up at 1 p.m. with the midweek strategy webinar. We'll be back right on board here tomorrow morning at 8:30 Eastern for another intraday strategy webinar. Till then, best of luck trading. Watch some of that data coming out later tonight, and then obviously tomorrow morning, CPI figures from the United States. Just wanted to make sure, 8:30 Eastern. So we'll have that here in the webinar right at the open. Best of luck trading, guys. See you then. Cheers.